Well, the government finance ministry has come with guidelines on CPSEs. A number of issues there have been discussed and solution and certain points have been made. But what is the reason for this? And to explain a bit more about that, we are joined by Dipam Secretary, Mr. Tuhin Pandey on that. Thank you for talking to ET Now, sir. Let's begin by talking about if you can explain to us what these guidelines are in brief and what its impact going to be.
Well, these guidelines relate to several of the capital structuring measures, capital restructuring measures, capital management, and these were issued initially 2016, and there were some also in between some clarificatory and additional guidelines they were issued. Now they have been all consolidated, rationalized, and they are trying to reflect the realities, so they are more forward-looking, and they are intended to promote operational and financial flexibility, at the same time balancing the needs of investors, which are basically twofold. One is the dividend and another is the growth.
Now, what is the reason you are coming up with these guidelines after a gap of 6 years, 2016 last time, in 24 I would say that it's around 8 years. What is the reason for it now?
Now, the guidelines have been there, they are operational, they have played a big part, and we have looked at certain implementation issues. And within the implementation issues, like there were some exemptions which the people were seeking, not being able to meet with guidelines. And then we have analyzed the reasons, looked at, and therefore, consolidated them and rationalized them. This is a part of the whole process. The guidelines also actually indicate that after 3 years, again, they will be reviewed.
And so talking about NBFCs, well, for them, criteria is a bit different. What is the reason for that?
NBFCs actually criteria is one of the conditions was that 30% of PAT or 5% of net worth, whichever was higher. This was a uniform condition both for listed CPSEs, unlisted CPSEs, including NBFCs. Now they are in slightly different domain. Now listed CPSEs are market players, unlisted CPSEs are not. So they have been separated out. Listed CPSEs and listed CPSEs, which are NBFCs, they are also slightly of different genre. So one size doesn't fit all. The reason is that when they are NBFCs, then their raw material is capital. So what the capital, their net worth is what they have is the one which gives them the lendable capacity. So it's very important to maintain the capital, build the capital in order to lend more. And to that extent, I think net worth, they are normally very high net worth companies. So making a percentage of net worth as one of the conditions and making the dividend, to be paid higher of the two was actually a restrictive condition for their growth. So which we have actually taken it away. They will continue to give a minimum of 30% PAT as a dividend.
Will there be any exception, including banks, insurance companies, LICs? Will there be any exception to that also?
Well, I think that was the initially when the guidelines were issued, they were not really intended to be levied on the banks, because banks are regulated in a different way from the Reserve Bank of India. The Reserve Bank of India have their own dividend guidelines also on the banks, and the insurance companies also. The ADA is also looking at those issues. I think these two entities are fairly different. We have clarified that they will not apply, because it was in the earlier guidelines there was a lack of clarity. Of course, the banks and others, they were not following these guidelines anyway. But we have now made it very explicit and clear so that there is no confusion.
So talking about, if we talk bonus and splitting of shares, can you explain a bit more on the bonus and splitting of shares according to new guidelines which will be applied now?
See, basically what we are really saying, we have taken view of the market valuations and stock valuations over a period of time. Initially when we, a few years back, when, you're talking of stocks in 30, hundreds and 200, they used to be very pricey stock. No longer so. We have looked at the valuations, they have gone in a different way, and there have been very large number of now participants, people, the investors who have come over a period of time. So the new things which new guidelines, they reflect those realities rather than, trying to do bonus shares and splitting on a very frequent basis, we need to really have a strategic and technical advantages in trying to do it in terms of shareholders. So that has been taken on board. So, like for example, when you split a share, you split a share of 10 rupees and into, say, if it is start with 10 rupees, and you don't normally start with 100 rupees. So the splitting will be 10 rupees will become 5 rupees split, or the 2 rupees split and to 1 rupee split, and beyond that you can't have split because there's no fractional shares that we have. So the disadvantage of having a multiples which were aligned earlier were that you were intending not to split beyond that, but the guidelines were such that you were to split, so they were seeking exemption. So now we have aligned the guidelines to reflect this reality so that they don't have to seek exemption again and again.
Sir, will there be any guideline now on the listing of, will these guidelines also help in listing of CPSEs further?
Well, listing is a different issue. I mean, what we are saying is listing is a thing wherever we have a possibility, we try to list those companies. And the government has also, enabled the companies to, and in fact persuaded the companies to even list their subsidiaries, not even the holding companies, which were listed companies. For example, the NTPC is a listed company, and the government is the majority shareholder, but the others also is a fairly widely held company now, because almost we are almost about 51%, and the rest is outside. But underneath the NTPC has built up a subsidiary, NTPC Green, which they are now listing. In fact, the IPO has just been announced, and it's already in the market. And they are now seeking funds in order to grow their own businesses in the NTPC Green. Similarly, there are other companies which will also be trying. You've heard of IGL, which is again a joint venture which is down by listed, and you have other subsidiary companies also which are there. So technically, we have many of these companies which are brown today and which are in the fossil fuel sector. They're trying to build up their own green subsidiaries, and one good way of bringing them to the market and raise money is to list them.
All right, sir. So here we were talking to Dipam Secretary Tuhin Pandey. Well, yesterday, Finance Ministry has come out with the new guidelines on CPSEs capital restructuring, and we spoke all about that. Back to the studio.